What's going on, YouTube? Time for another awesome recap. So let's get into what happened today on the market. This was a very clean move this morning. We had a lot of really clean, good calls. So let's start with Twitter. This morning before market open, I said PCE was iffy. Will be spun as good news for the first part of the trading session. Looking to watch for a gap tag or higher low formed on the Q's daily gap, then long potential into the blue zones, walking it up, scalping both ways. Now, of course, this is way in pre-market. You can see the candles aren't even existed yet. And we are looking for a dump into the gap fill on the Q's daily and then to go long. Okay, we called that move. We've seen the PCE. We're going to spin it as good data. And that's what the call was. So let's take a peek at the next post. Then I give you guys downside metrics on Twitter for free. What do? We look at the algos, like always. Here's my fib box, right? Points to the downside on Qs. Qs had the intraday algo. My short target is the 1618, right? So if that's a short target, this becomes a long entry, right? So I told you guys straight down to the 1618, fill the gap. The gray box is the gap. This is the daily gap left on the Qs. And I was screaming at my premium chat here nonstop that it needed to fill this gap to go long. Okay. Boom, fills the gap, goes long for the first part of the session. Then you can have a downside. That's exactly what we talked about on Twitter. And as I narrated through the chat, let's take a look at what happened into the TOS. So the same fibs I just had on the screen here for the Qs. I said the first part of the early morning session will get squeezed up off the 1618 and the gap. Here is the gap. Here is the fill. Okay, so here's the gap fill. Here's the 1618 that I called prior on Twitter before it even happened. And I said you're going to go long right here as that is the short target. So you are going to short the PCE's iffy data down into the gap fill, like we posted on Twitter, into the long early morning session, and you will fail later on. That's why I said early morning session. So how would you be able to play this? Well, we made over $2,300 today on just a couple scalps. The live trading video will be down in the description. If you want to trade with me live, that link's also in the description. You want to trade through Apex and make these funded accounts with very little to risk, my link's also in the description. So please give that a take out and look if you find these videos valuable. So what about this? Was the easy mode? Well, the golden pocket on the fibs, as we always talk about, check our prior videos. How do we use Fibonacci's here in my group? This is the golden pocket above and below the 50 fib. I called the short right here today that it was going to go lower, then crack back down. Don't know how low she was going to go, but we had an opportunity to retrace because the early morning session will get spun to push after the gap fill because the daily gap was not filled, right? I did a live trade, check on the channel as well, of a long yesterday saying this gap would not fill from here to here. And I said it would leave something. I look at this giant sucked up candle from yesterday. That was a massive long. We took that one long on live trading. Check the channel as well. And then when we get into today's short, let's go with the fib brackets that I'd posted on Twitter. So I posted this fib bracket here for the algo and the golden pocket resistance. So we filled the 1618. Once it breaks back inside the box, the 100 fib, right? We go to the golden pockets. Here's the golden pockets above and below the 50. Perfect double top. Shot right back down to fill, right? So let's look at the indicators, how easy these were. Double top scenario, indicators were already telling you lower highs, right? RSI and MAC both had fantastic lower highs, okay? Now the blue zones. Now I talked about the blue zones coming up on Twitter too. So these blue zones are my volume zones. Okay. So this is the secondary confirmation of the trades I needed. We had a fair value gap in pre that I said would probably fill, and I said long into the blue box. Okay. You know, here's the blue box. Here's the gap fill. Long into the blue step up. We made it to the blue box one. So we called this long and this target short. This was our target for the long, first one. Then you wait for digestion in confirmation. Where did I get these levels? Are they just magic? Yeah, pretty much. 15-minute chart. Volume area high pieces here. And again, how we chart those out is we look at prior day's volumes on where the highest effective trading volume was at price. Okay. Y-axis volume, not X. So as you see here, we get some very tall volume profile highs, which I charted off. In every single one of those, except for this blue zone, this is from a 30. This one was a little different, but this was the huge number one target, and this was the long. So I wanted a flush into here, which we posted ahead of time, and a push into the blue zone for an early morning push long session. Then it was going to drop and go back short. And we used the algo in pre-market on the Qs to determine the golden pocket short yet again, because these algos and these little blips in pre-market and after hours tend to play out algorithmically through the day. So with these two top bands right here, we had a couple different options there. We shorted the top of the VWAP. The 666 5-minute could not hold support. Giant M pattern, which is a nice fail through. Inverted W, obviously. And all the oscillation indicators were telling us. So we had a perfect dip buy. This was one I did live trade. I waited for it to come back down in the live video and fill the gap and then go long. And that was just a massive long all the way back up. Then I called short before I left my group and said, yeah, just let this thing pop up a little bit. We can come all the way back down to purple VWAP or lower VWAP. Boom. Recalculated here, popped one more time, went flat because it was a Friday, but all trades came through perfectly. So that's just a very small recap. So what do we expect next, right? Well, right now, VIX is still in that downtrend. We're still kind of sticking to highs. We have a little bit of a wait time on VIX for that thing to digest all of this data that we got. So what do we see here? Well, we already did a recovery of the 10 SMA and the long-term on Qs. And we're already kind of coming down from an overhot, and the MAC is just starting today to the backside. Now, we do need a pullback, and I'm still pretty good on my short bias with from the highs, we will get a little bit of a pullback. I'm not bearish by any means on some kind of giant dropped recession. If we get a quick pullback down into the early February, the first 2 weeks of February, into the mid-February, that's where I'm still planning. So I am accumulating shorts on certain companies right now. In the long-term options, 90 days out or so left in those contracts. Can't really give you those for free, but where are we going to head? So the Qs has a bunch of unclosed gaps, right? Here's the next one. So this gap Qs here paired with a very specific Fibonacci that I was using literally this morning puts us at dead center and damn near close of this gap. So if we get continuation down, so we filled this gap. Remember, I said no tag, no fill here, so buy that up on the last live. Then I said do the Fibonacci's to the downside here, walk it down from the blue zones because of early morning pop sesh coming down. We need a third continuation heavy red day where there may be a gap down or 2 days worth pressure. So with this algo alone, we're just going to use this algo right here for funsies. It's played out pretty well. If we continue under the 1618 for the red day, we're going to magnet to the 2618. We can have our opportunity to pop back there to the 1618 and continue down. Chase down that 10 SMA. That could only happen if the VIX decides to get back up and over 14 and get some maintenance on that upside potential. And we're going to look for the dollar and a couple other things on the Dixie to kind of help us out. Now, since earnings are just kind of mixed, besides Tesla kind of falling apart, most of the stuff was pretty average today. Netflix still moving off the earnings and just doing high pushes. But things like Amazon, Apple, AMD, those are all cherishably kind of either flat sideways with Googs or putting in a lower high and potential roll. Now, we could still squeeze up from these things. It doesn't really matter that much because in the next 30 days, we will get a standardized pullback. It's not a recession pullback, anything like that. It is election season. And election season has 100% been accurate to never show a recession during an election. So what do we look for? Well, the continuation down to the 2618 fib and then to the 423.6. So we're looking for at least continuation on red days, depending on how the oscillation works. If we look at our daily chart here, the oscillation indicators, we are putting in a lower high, even though price action diverging, right? Showing the hot. And a lot of the times you'll get divergence within the next week or two will have a play. So if you look at this divergence, we have highs and lower high on the RSI. The MAC cross, we got lower histogram waves. So we have a nice big green wave here, lower wave here, crossing back down. What did that cause? That 4-day rally to that bottom side gap ago. Then we called this long right here. We literally called 3 days red under here. Check the videos and this whole pressure move up. So we got that one spot on. This one's going to be a little different. So the gap that we have open down here on Qs, this is where I kind of want to get to on the first early February pullback, 414, 415. We got over 10 points to do it. What we are messing with right now with the fibs. Now we have lower high here on the RSI. We don't have collective amazing volume to send this down quite yet, but we do have a little bit of backside oscillation starting on the MAC. So if this MAC is the next lower high and it starts to recross and decides it wants the 50 tag, because once we've broken over that 50, especially in the MAC right here, it needs to hover and come back down to that 50 before it wants to either drag itself into the lower band or hold the zero level on the MAC before it wants to do another rip, rally, roar up, which is perfectly fine to me. But right now with the lower high on the RSI, we are just kind of pulling down from that hot side. We could look at a little faster time frame on the 4 hour, might give you a better incantation, but the MAC has been crossed for quite some time, telling you that these days we're all going to be popped to short, which we have been utilizing quite frequently and very easily here so far. And now what we look for here is something that's going to reset the 4 hour into the bottom channel of the RSI and continue the MAC into the zero line. So again, it can take days, right? It can take a couple days to work out or a week. And as we move into February here, we're going to look for those divergences to keep playing. But once the market gets hot, and we've already been on a very, very big push, these systems here, like these big red pullbacks, come after the hots within a week or two. Now we're coming off of a hot, even if it wants to come back down and put in another lower high and just come down a little bit and then come to that 50. We're not going to get this hot right here. I think we're going to come back down to that 50, and we need a bottom channel reset through February. Now, if we do get the reset channel with the one that doesn't hold the 50 this time, it breaks through and it comes all the way down here, and it like rips down to some of these like super low gaps, 100 EMA back test, because the last time we've seen confirmational back test on major moving averages on the daily has been quite a while, because we need back test confirmation. We gapped over the 100 and gapped over the 50, so we don't have back test of any major moving average. So when the market starts to get heavy, these two guys are going to be your targets on the way down when it does crack, because we have no tag, no tag. We have two gaps that exist that have pushed perfectly through these major moving averages without touching. Look at that. Okay, 100 EMA, 50, they're not touching price action, which means when this starts to tumble after a couple 10 SMA loops, okay, the 10 SMA is the blue dash line right here, and it loops price action. So it squeezed that 10 back here, right? Pushed all the way up. What did it do? Looped under the 10 SMA, faked out the shorts, blew it out. This loop right here, we called this one. We called the long exactly right here, looped, confirmed the back test, blew out of the water. Well, the next one is coming up. We have hot RSI, and we have a couple different reasons that we could see a little bit of a pullback coming into more ERs and a better technical analysis setup for where we're over hot on the RSI. So what we're going to look for is that continuation, break the 10 SMA and start searching for the 50 and the 100 on the daily chart on this pullback, because we haven't seen one in months. So back here when we had last interacted with it was literally October for that last sentiment drop that we had called even back down to the 200s and then poof right off the 200s. So for this confirmation to work, we do need a little bit of back test on some of the major moving averages. As you look back here on the last time this has happened, we can put the price action up here and you can see it. Once we move back over, we needed to pull back down. And the last time we've interacted with a good 50, 100 right here was the last time, literally way back in March, before we had the tumble. So we got March, April, May, June, July, August, September. That's the sentiment, right? The September rollover. So August, September, and October were the rollovers, right? And we hadn't seen a moving average tag of the 50 or the 100 for months before that. So we're going from March all the way into October, September. Now let's look at this one right here, what it did last time. Now, how many months was that? 3 into 9, that's 6 months. So 5-6 months. Here's the 200 tag. Here's the gap, the gap. How many months do we got? This is the 11th. So we got all of 11th, all of January, February, right? So we're going to get about half that, 3 months. And that's what's going to start that pullback that lasted a couple months here in sentiment. So time cycles do like to appear here. So if it starts on the 3rd, right? 3rd month, March, end of March, got April, May, June, right? July 7, that started the big old dip. August, October, so on and so forth. So sentiment's getting close. So I think we're going to have some all-time high pullback here, hopefully. And that's not going to end the trend. This is literally just a scalp back down to moving average before it wants to make the next move up to like deviation. Because if you're looking at deviation, +1, -1, whenever we get into that +1, +2, which we're easily capable of getting, and these are the dash lines that you see on the big dash lines here on the daily chart. The deviation on big upside moves, when we recovered here in the 1, it moved all the way up to 2 and it stayed hot forever here. That was coming off some extreme lows. We're coming off all-time highs. So the second we usually get closer to the push up to the deviation 1 and 2, we'll fall down again up there. But the first fall is going to be hopefully soon here as we have RSI and MAC signals starting. So the start from here, where we come back down to that 50, do another reset for whatever happens to be. We could find some gaps lower, but we are going to find the 50 and the 100 and most likely catch something at one of those markers. So I'm looking for even more highs, doesn't matter to me, and both in February, searching for the 100 and 50, and then back up to the deviation +1. So this is still going to be a dip buy zone on the daily for future predictions, but we need to come back down to test that 50 and the 100 eventually. And in the next month, I feel like we're going to get an opportunity to do so. Now, if we look at the weekly real quick as well, some of these deviation lines that will help us here, 1 year. Oh, I don't think they're coded to move over on this one. That's okay. So the standard deviation dailies versus the weeklies, these right here are going to be the biggest of the big, and they overlap. They're so close to the weekly daily because we use it a 1 year time frame. But mainly this is going to be like 450, somewhere in that 440, 480s, like pretty easily on Qs. Now, if you look at SPY, that's going to be generally the same. These markets do obviously coincide, but SPY is getting a little bit closer to that +1 than it is on Qs. So if we go back to some of our Fibonacci upside here, some of the biggest enders here is 496, just sub 500. And again, that's going to be after the pullback is what I would like to see, because we don't have a lot of gaps to be tested down here on SPY. We have this sneaky double gold fill that we talked about on the daily chart that was like right here that didn't fill this gap. We have a 482. So that's going to be one of the first gaps. I figure we're going to come back down, that 482. So if that comes back down for a tag here soon, that's going to be, we got like right here. Yeah, that's where the gap is. So back down by that 100 fib. This is where the sneaky little sliver gap is, right here. And right here. So all the way back near 482.67 would be viable, but right now you can see that static trend. We're getting a real shaky up here. And if it goes up one more time and sets highs, by all means, that's fine. But this is going to be one of the first short targets when the roll starts to happen, is going to be the close of 482.67 on the micro sliver gap that it has on the daily. Now, of course, picking tops is difficult. That's why I usually get contracts pretty far out. 90 days, couple months, when I start to slowly begin to get one or two contracts, and you start to see them kind of roll back over as you average in. So when that big speed comes up, the option premiums jump, so on and so forth. You know the game. But back down to the deviation center, moving averages. I don't think we're going to take some of those big gaps yet, but let's look at the oscillation real quick just to funsies on SPY. You can see this is another lead front where we're getting a hot RSI reading. And again, it can overhot a couple times as price action goes up, but when RSI gets hot, not something like the consolidation one you've seen here where it's slowed down and it's a 10 SMA catch up. That's the first 10 SMA off the gap. So the moving average catch up was just going to launch itself. It had a first loop right here. So the secondary loop should fail and come back down to that 50. That's another thing on SPY. And we are coming off a hot. So we did get the higher low signal. We got the small histogram signal. So all these were dip buys. We called this buy. We called this buy on the gap and going Qs and push that up because of the oscillation indicators helping us out. Now, if we put in a smaller green wave, because again, you're seeing some dark green coming in these waves, we're going to see an RSI come down and hopefully do this to the 50, because we didn't hit the 50 here. We got the higher low here, and we do need a 50 tag. So that's going to be that next reversal back down to hopefully hit the 50, and we can go back long after that. But again, just like Qs, we have some gap action on the moving averages that just never touched, right? So when we get gap action like that, where we don't hit moving averages, the algos will magnet back to them. This is another example. When you see a gap like this and it pushed through the 100 EMA and did not tag, came back to the 100 EMA before it wanted to go back down. So if you flip that inverse to what we're looking at right now, we gapped over the 100 EMA way back here, had the big old FOMO Momo run, but in order for the market to continue at highs, we do need a back test of that 100 EMA. So I am telling you to watch whenever this may be, when the price action comes back down. Maybe it's only the 50 and the next one's the 100. The 100 EMA is going to be the best of the best dip buy coming into 2024, 25, and then potentially the end of the push to 26. We're still going to get that dip buy because we are at a presidential election season, and I think all dips will be bought. We're not going to get a recession. We might get a nice pullback. Nothing massive that I see in my eyes. So hopefully these predictions are something you can hold on to, and we can watch these play out together here and trade appropriately. So tune in for the next.